coming on the air with breaking news and the turmoil on Wall Street amid the coronavirus outbreak. All three major averages, the Dow, the Nasdaq, and the S&P, set to plunge as the trading day begins, as it has just a few seconds ago. We see what's happening right there. That's the Dow Jones, down about 7% this morning in the trading. All of this follows the president's address to the nation last night, outlining the government's response to the outbreak, including a 30-day travel ban on travel from Europe. Let's go to CNBC's Becky Quick. As we talked about the other day, Becky, a lot of times it's the futures markets, the overnight trading in the overseas markets that give it a preview of things to come here. What do you expect?
Well, it's been a pretty ugly morning. We've been watching the futures today limit down almost most of the morning. You see right now in the very trading, and it does take a minute or two for the futures to kind of settle, or for the trading to kind of pick up. You see the Dow trading down just over 7%. If this continues as all of the stocks open for the Dow Jones Industrial Average and for the S&P 500, you will see a halt to trading because 7% is the circuit breaker. When you see all stocks open, if it still continues to trade down 7%, you'll see a halt of 15 minutes for trading. These are circuit breakers to try and make sure that panic selling or machine selling doesn't kick in some of these situations. They want to make sure that traders have a little bit of time to kind of assess the situation and maybe allow for a more orderly trading fashion. We have not seen circuit breakers used until earlier this week, since all the way back to 1997. So you went about 23 years without the market panicking on these levels. But as you can see, we're trading right around that at this moment. It would be the second time just this week.
And so we'll keep an eye on what the circuit breakers, whether or not they're triggered or not. But also, Becky, another unfortunate milestone yesterday, and that is the market going into what people in your line of work call bear territory, right. 20% down off its highs. It's been a bull market, meaning going up since, I guess, for about 11 years. So if you can talk about the significance of that.
It is a big deal. Maybe what's most concerning about this is the velocity and the rapid speed with which we've seen this big decline. In fact, we've dropped from all-time highs in the market to down 20%, that bear market territory, for the fastest time in history. For the Dow, you were looking at a record high just on February 12th last month. For the S&P, it's been even more recently. It was trading at its all-time high on February 19th. So in the span of a couple of weeks, the market has just tanked and fallen to these levels at the fastest time we've ever seen, from an all-time high to a bear market territory. And that's what has a lot of people concerned. Also about potential dislocations that come with a market drop in that kind of rapid fashion.
Yeah, there's so much to cover here. Becky, hang tight there for us as we watch these markets open. NBC's Peter Alexander is at the White House for us this morning. Peter, the president addressing the nation, an Oval Office address, quite extraordinary in and of itself, and then announcing these very dramatic measures, including the travel ban from Europe that I mentioned.
Yeah, Savannah, that's exactly right. This morning at the White House, they've been bracing for this market open. You see the dramatic drop that we're witnessing right now. This is a president who has sort of measured his success over the course of the last several years by the economy, by the stock market, and now he's witnessing just a tremendous plunge here. If the president's desire last night was to try to calm the markets and to calm Americans, it's clear that that did not happen. Even as the president said that this is not a financial crisis, though, he did try to detail a package of financial proposals intended to steady the economy right now. A lot of them still require buy-in from both Democrats and Republicans. Most strikingly, though, the White House was almost immediately in damage control, trying to clarify some of the president's own remarks last night. Among others, he said that health insurers had agreed to waive all co-payments for coronavirus treatments. In fact, it's only co-payments for testing that to this point are being waived, after laying out that travel ban from Europe that would affect all the EU nations other than the UK. The president said the prohibitions would apply to tremendous amounts of trade and cargo. Within minutes last night, his aides clarified that the ban only impacted people, travelers, not goods. And he also did try to clean up some of the past comments he's made. You'll remember just days ago saying it was okay to go to work last night. The president acknowledging this is a global pandemic and effectively now for the first time urging anyone with symptoms, as his health officials and other public health officials have done, to stay home. Savannah.
All right, Peter Alexander, a lot to catch up on there. The European travel ban not applying, it turns out, to Americans or legal residents, but for those traveling from Europe for the next 30 days, and it starts Friday. We've got a lot more on NBCnews.com as we speak. Also, MSNBC, CNBC, of course. Most of you return now to the Today Show. I'm Savannah Guthrie in New York. This has been an NBC News special report.